Welcome to Stock Breakthroughs. I'm your host, Erin Beal. Well, it's that time of year again when many investors hit the road for summer vacation and leave their portfolios on autopilot. As we know, this usually leads to summer market doldrums, where volume drops and share prices fall flat. So is there anything worth buying out there as we move into this slow period? My guest today is Adam Lass, market analyst for Wave Strength Options Weekly. Adam's technical system scans the market looking specifically for dramatically over or underpriced sectors. Welcome, Adam.
Good to be here.
So Adam, what do you think? Are there deals to be found at this early summer slump?
It's a real pleasure, Erin. We are a bit early to the party right now. Normally, this is when folks are looking to exchange higher risk shares for cash and then beat it out of town for worry-free vacations. But that doesn't mean that there are no deals out there. Diving in right now, though, is going to take some real courage. It's kind of like surfing. The regular beach with the lifeguard and all is simply not where the good waves are. No, the good ride is to be found in the one place that's roped off with danger signs.
Okay, Adam, well, what's so dangerous? And if it's so risky, why would we want to get involved now?
Well, I'm talking about real estate here, and you can't ask for a more depressed, even a depressing sector. And believe it or not, that's where to look for discounts right now. Erin, most folks wouldn't dream of buying anything with an address just yet. The losses that builders and real estate agents have been suffering are certainly very, very real. Indeed, the share prices for most builders and real estate investment trusts have been burned to the ground, and that's what makes them interesting.
So now let me understand here. Are you looking at bottom feeding the builders?
Well, not quite. And to be honest, I don't know whether this is the precise bottom for each and every builder and developer, but I can tell you that the ETFs that aggregate these players into bundles are showing distinct signs of a bottom.
Wait a minute, Adam. Can you be more specifics? Which ETFs are you looking at exactly?
Well, for our purposes, the Dow Jones Real Estate Index Fund is as good a bundle as any. Operating under this ticker symbol IYR, it holds shares of well-known real estate players like Simon Property, Vornado, Prologis, and Boston Properties, just to name a few. Now, any one of these guys might still be suspect, but as a group, the IYR is showing some intriguing technical indicators. On a weekly chart, we recently saw a sharp dip that was actually good news for us, as it pushed share price down into the oversold range. Now, negative cash flow is leveled off, and the latest weekly tick is a spinning top at the bottom of trend, a fairly good indicator that the bears have lost control here. On the daily chart, we're seeing strong green ticks for the first time in a while as savvy players begin to sniff around looking for discounts.
So then, Adam, would you buy shares here? And if so, what kind of upside story are you looking at?
Actually, Erin, I would like to take the level of sophistication up one more notch. When you don't know the exact player or the exact move, but you know it will be big when it happens, you don't want to commit but so much cash while you're waiting around. My suggestion is that readers look not to shares of the IYR, but rather to long-dated call options instead. Oh, as of this morning, you could buy, say, IYR December 83 calls for some $6. Considering that the shares are trading for almost $84, you're paying less than $1 a month to carry these contracts, and that's a deal in any wise option trader's book. Now, these options are posting a delta of 63 cents. That means that they can be expected to gain 63 cents for every dollar the IYR moves up. Should this ETF do nothing more but move back to its spring trading range, you would see gains of 48%. But that's only a taste of what could happen if you're patient. Should price return even halfway back to this year's highs by, say, Thanksgiving, you might very well enjoy 70% gains. Now, a return to recent highs in 2007 is unlikely, but should that come to pass, your calls would more than double in value.
So let me see if I understand your logic here, Adam. Are you saying for a mere $600, an investor could control the movement of 100 shares of the Dow Jones Real Estate ETF? And by doing this, they could magnify a relatively small $5 upside move into significant double-digit gains? Is that what you're telling us?
You've got it down pat, Erin. In fact, I like this idea so much, I've already recommended this same asset to my Wave Strength option readers. However, with as much room to move as we're looking at here, there are still ample gains to be had for your viewers.
That sounds great. So Adam, how would our viewers learn more about your Wave Strength Options weekly service?
Well, they can, of course, always visit www.wavestrength.com, and they'll find all the information they need to join right there.
That sounds great. Well, thank you for joining us today, Adam. We'll check back later this summer and see if you've made the right call on real estate. That's it for this week's edition of Stock and ETF Breakthroughs. I'm Erin Beal, and I'll see you back here next week.